everyone. Okay, so we are coming to the end of the beginners class, and I've taught you a lot about in beginners class. I started with the meaning of FX, then I go ahead to tell you the forces of FX. I mean the participant that trade FX. I went ahead to time sessions. I went ahead to currency and currency pairs. I went ahead to spread and brokers. Then I proceed to um, concept of bull and bear market, where I explain the bull, the bear, the forces, the trend, and the time frames. Well, I proceed to lot size, the margin, the leverage, and other things. Then I continue the risk management, how to set your stop loss, your TP, your entry point, calculating your risk to reward ratios, position sizing, and the likes. I taught you market analysis, fundamental, technical, and sentimental analysis, and I conclude with social trading. Okay, so today I would this final training is just for you to be able to trade as little as possible you can make. So I'm going to teach you a strategy you're going to use to trade as a beginner's class. So the first thing you're going to do is this strategy is only suitable for USD pairs or JPY pairs. You enjoy this strategy using 30-minute time frame. Okay, you enjoy this strategy using 30-minute time frame. Can you see I've switched it to 30-minute time frame? 30-minute time frame. The currency pair that you enjoy is probably Euro USD. In fact, major currencies you enjoy with major currencies, because major currencies tends to trend very well. So switch to USD JPY now. Let's see how the chart looks like. So remember, the major currencies. This analysis, this strategy is good for the major currencies, and the suitable time you enjoy with this strategy is 30-minute time frame. So let's wait. Alright, so we have the USD JPY now. Now the second thing we are going to do is to plot our indicator. We are going to be using 4 different moving average, and that will be exponential moving average. You might not understand exponential moving average, but let's just put it there. We are going to use 4 exponential moving average. We are going to be using 25 exponential moving average, 50 exponential moving average, 100 exponential moving average, and 200 exponential moving average. Hope you get what I'm trying to say. 25 EMA, 100 EMA, 25 EMA, 50 EMA, 100 EMA, and 200 EMA. So if you want to plot your moving average, just tap the screen, then click on this F here between the dollar and these shapes. Click on the F, then you see trend, then you see moving average here. This is moving average. Just click on the moving average, then you set your period to be, the first one will be 25. Okay, then let me do it slant so that you see your period is 25, the shift is 0, the method is exponential. You can see simple, exponential, smooth, and linear. We just click on exponential, then apply to the close. Then our 25 moving average will be red color. That's the red color here, so you can pick the red color here. So just click on it, and as you can see, our 25 moving average has been spotted. Our 25 moving average has been spotted. Okay, you can see how it goes. Now the next thing is to plot the next one, which is 50 exponential moving average. Click on the F again, click on F plus here, then click on the moving average again, then change this to 50. Let me just slant it so that we'll see very well. 50, shift to 0, exponential, then you change the color to probably blue. Okay, that will be able to differentiate the 50 from the 25. Okay, so you can see the 50 moving average as blue now. Can you see it here? Yes, you can see it here. So also let's plot the 100 moving average. The 100 moving average. The 100 moving average. the 100 moving average. Let's make the 100 moving average um green color. Okay, green color. You have green color here. So this is the 100 moving average in green color. Then finally, let's move to the last moving average is 200 exponential moving average. So let's click on 200. Then let's make the color black to be able to differentiate the moving average from each other. Okay, so as you can see, the 200 moving average is the up one, the green one is the 100, the red one is the 25, and the blue one is the 50 moving average. So after you have plotted it, the next thing for you to determine is the trend of the currency pair. The rules of this strategy is that you must make sure that this pair is trending. So as I've said, make sure the market is trending. How will you know that the market is trending? Okay, on the M30, just squeeze it with your hand. Squeeze it as if squeeze the chart. Okay, you can see the chart that is squeezed there. You can see that this is really trending. You can see previously it was a downtrend from year to year. From year to year was a downtrend. Then the trend spiked up. Then we have another downtrend here. Another downtrend here. Then we have an uptrend, an uptrend, an uptrend here. Then we have a downtrend, here. Then it seems like an uptrend is beginning to form here. Can you see? But before that, just check on the H1 chart or the H4 chart to see what is actually going on. Okay, on the H4 chart, on the H1 chart, it seems the price is ranging, although there was a downtrend, but currently the price seems to be ranging between those points. Between this point, price seems to be ranging. Can you see? Between this point, price seems to be ranging. Okay. Never mind. This cannot be filled. So looking at this current rectangle I drew, you can see that price is actually ranging. Okay, price is actually ranging, so we can't say there is a current trend here. However, looking at the M30 bar, if you want to identify a ranging market from a trending market, you will definitely know. Like this point, there was a contraction in the moving average. This point, I'll show you here. From this point to this point, there was a contraction. There was a contraction of the moving average. The moving average were contracting together. So if you see that this moving average are contracting together, it seems that the market is not trending. So don't trade. Don't enter any trade when this moving average contract together. Okay, it's telling you that there's no trend at the moment. However, look at this point where the moving average tends to be expanding and to be becoming more parallel. You can see that this is a downtrend. So this moving average is telling you that a trend is occurring, in which the moving average are now coming down and becoming parallel to one another. there's no contraction between the moving average, unlike this point where there's a contraction. You can also see an example of the USD CAD. Let me show you. There was a USD CAD, USD CAD. Hold on. USD CAD here. Let's check the H. Okay, let's check the H4. Okay, you can see during this period here that that the price, the moving average was contracting together. Okay, you can see that the moving average was contracting and they were not moving in a particular direction. They were just contracting. This point is a ranging market, not a trending market. Okay, you know what to do. Okay, I've not teach you in a ranging market, but I've not teach you how to trade in a ranging market. What I told you in beginners class is when you see a ranging market, then you better don't trade, right? Later on in the basic class, I will teach you how to trade a ranging market. But for now, let's just proceed. So this is a ranging market, and you can see from the moving average, the EMA, that the EMA is just contracting and contracting, and it's just linear. It's like a straight line. There's no direction. You can see that there's no direction. However, when you move from here to here, you can see that the moving average were were becoming sloppier. Okay, at this point, hold on. Okay, you can see that this is actually coming downtrend, although the downtrend is not that strong, but the price was moving downtrend manner. So you can see that the moving average were coming parallel and were expanding from one another. So that is one example of how you can identify a trending market from a ranging market. Of course, I've taught you how to do that in the previous class. I'm just teaching you how to use the moving average now. So the first thing for you to do is to check whether the market is trending. Number one, after you've checked the trend of the market, if it is ranging market, then you should know that you should stay out of the market. But if it is trending market, then you should know that you look for a trading opportunity. Okay, after you have determined whether the market is trending or not, you should determine the trend, whether it is an uptrend, whether it is a downtrend. Of course, you know what an uptrend is. An uptrend is when the market is going up steadily, while a downtrend is when market is going down steadily. Of course, you can use the moving average to identify whether the market is an uptrend or downtrend. If the market is an uptrend, the price will be above the moving average. Let me show you an example of uptrend. We can see here currently here, between here and here, you can see that the market was in an uptrend. Let me just show you very well so that you see. Okay, let's use this particular currency pair. You can see that the arrow here, the line, the price was moving up. Hold on. The price was moving up steadily, so this is an uptrend at this time. And look at let me use another example. This one is not that of the uptrend. Okay. Okay, here. Let's see here. You can see the price was clearly in an uptrend. And if you look at this, you see that price is above the moving average. Price is above the three moving average, the 25, the 50, the 100, and the 200 EMA. Price is above them, and you can see that price is steadily moving up. However, in a downtrend, what we see in a downtrend is price will be below the moving average. Look at this example of a downtrend, and you will see that price is below the moving average. Price the moving sorry the market at this particular stage is a downtrend, and you can see that price is really below the moving all the four moving average. You can see that price is below the moving average. Okay, you can see that price is below the moving average. So you can use moving average to identify whether if a market is uptrend or downtrend. In an uptrend, the price will be above the moving average or the four moving average, and a downtrend, the price will be below the moving average. So I've told you that first thing you need to do is to identify whether the market is trending or ranging. Then number two, identify the trending of the market, the trend of the market, whether it is an uptrend or whether it is a downtrend. Then after you have identified this, what you need to now do is now to look for a buying or selling opportunity. If the trend is downward, look for a selling opportunity. If the trend is upward, look for a buying opportunity. Of course, I told you that in an uptrend you always look to buy. Okay, I told you that a friend is your trend is your friend. Don't go against the trend. Remember what I told you? Yes. So if it is an uptrend, you look for a buying opportunity. If it is in a downtrend, you look for a selling opportunity. So I will end this video here now. Then I will explain how to buy and how to sell in the next class. Okay, just stay tuned and practice what I just taught you here now.